What's cracking, YouTube? We back with another episode from Trenches to the Bridges, y'all. Listen, now today, most likely you paid me your $5. You want to be in the group chat. You want to know how to trade options. How can you make money 5 days a week, Monday through Friday, in the option world? All right, so I'm gonna make a little video called Stocks for Dummies. All right, now this is gonna explain the basics, concepts, what you need on an everyday basis to trade and make money. Okay, now trading and investing is two different things. I'm gonna make a separate video on that, but today we're gonna specifically talk about trading stock options. All right, say it again, trading stock options. All right, so if y'all don't know, the first thing that I will say that you need, and I would not recommend doing this only on your phone, is either a laptop or a desktop computer. Why? So you can see your charts. You want to see your charts and you want to go off your candlesticks. Before, in the past, yeah, you could trade with just your phone, but you'll have to be flicking through different apps. Have one app with your plays and one app on your phone. That's setting you up for failure. You wanna be able to look at the chart, click your plays on a dime. Okay, it could take 10 seconds. You'll lose 15% just going from one app to the other, or you could lose your buying opportunity. Okay, every second is crucial. So if you want to make money with me, I'm gonna set you up for success. So you want to have a laptop or a desktop. All right, you could be anywhere trading. That's the good thing about trading. You could be at work doing another job. You could be on vacation. You could be at home. You could be at your mom's house, your boyfriend, your girlfriend's house. You could be anywhere, all right? So the next thing that you're gonna need is a brokerage account. You could use Robinhood. You could use Webull. You could use Thinkorswim, all right? You could use Moomoo for options. But with me, I recommend using Thinkorswim. That's what I'm doing with my team. Why? Because Thinkorswim got the trailing stop loss, right? So if I was to say trailing stop loss 5-10%, I want you to be able to do it right with me, okay? Webull don't have it, Robinhood don't have it, Moomoo don't have it, but Thinkorswim do. So you might be familiar with Robinhood because that's what beginners use, but I recommend just going with Thinkorswim and just learn from there. You don't want to, if you're a person, right, you want that BMW, all right, it's best to just get the BMW instead of getting a Nissan, all right? You want to get the BMW first. All right, so let's just say, this is Stocks for Dummies, all right? Let's just say you have your calls and your puts. You're going to ask Moolah, what is a call? A call is a bet that stocks are going to go up. You're a team bullish. You a bull, all right? Stocks are gonna go up in the uptrend. That's your bet, all right? In a downtrend, you're a bear. You're bearish. You having a bet on puts that stocks are gonna go down. So calls, the stocks is gonna go up. Puts, the stocks is gonna go down, all right? And that's your bet. So I'm gonna go over this with y'all right on my phone. I'm gonna do it from Robinhood, just from teaching purposes. All right, let's go to Tesla. All right, we could do this in live action too, but you see how Tesla got to 182, right? Now let's say I say, hey team, I'm gonna do a 185 call on Tesla. All right, I will click trade. This is when the options were set up. Now it goes by expiration date. The further your expiry date is out, the more your contract costs. The shorter it is, the less it costs. And the shorter it is, the more money you can make quicker. Your contract will move more quicker. So let's say I do February 9th, the 185 call. Now, if I'm doing a call or a put that's 3 days out, I'm always gonna do in the money. Now you see right here, you have 185 call on Tesla. The break even be 190. We're not holding it to the break even. We might just sell at 188. We just want to get direction, flow into that direction. You want to trade the volatility in and out these plays, 10, 20 minutes, an hour the most. All right, and you got your 187 call. Now let's say I'm doing a call 2 weeks out. Now I will do the 190 call, right? 190. Give it some time. You got 2 weeks. That's my bet that the stock is going to go up in that direction. All right. Or if you're doing a trade and you probably got 1 day to expire, 2 days, 3 days, you could do the 185 call. That's what I recommend, because that's less safe, all right? If Tesla is at 187 and I do the 185 call, my break even is only $2. Now, but the contract, the closer your contract get to expiration, it needs to be somewhere close to that 190 level, 190, 80 level to break even. All right. So if you just holding it and it's just going up slowly, but it's not past the 190, 80, by the time your expiration date, you will lose money. It's called time decay. Okay. Now let's go to Think or Swim. Let's go to this app. Now, Think or Swim is what I use. It's on the trading app. Think or Swim, same thing. This is how it will look on Think or Swim. All right. Now, if I were to be like, hey team, I'm getting into 185 Tesla calls, you'll go to the Axe, you'll press next. I always do market order because I'm constantly watching my screen. So I'm doing it on the dot. Let's see how much one contract costs. That's $580, all right? You see how it's more safe? Now, if I was to go to the 190 calls, the more safe it is, the more money it's gonna cost. I just wanna say that. So I go to 190 call, you see that's only $327 because that's more risky, all right? But if the stock was to go in that direction and hit 190, you'll make way more money than you did when you did the 185 call. But if it go in the opposite direction, you're gonna lose way more money more quicker. So my strategy is to always go with the safer, right? Not to get rich quick. That's what we're not trying to do. Just do a bunch of random YOLOs and just hope that it go in the direction. You're gonna have a game plan, you're gonna have a strategy. So when I'm going to these plays, I'm trying to go into risk. All right. So the third thing you need for trading stocks is morning time. All right. The market opens from 9:30 a.m. to 4 p.m. All right. You want to be done with trading at least about 12 o'clock. That's when the market literally has the most volatility, which means the market is moving fast. Once 11:30 come 12 o'clock, 11 o'clock, the market start moving slow. So it's harder to really catch certain plays and make money. Majority of the time, I'll say about 70% of the time, the market moves fast from 9:30 to 10:30 or 11 o'clock. So this is Think or Swim. This is how I make my money. Basic, supply, and demand. The market is in an overall uptrend, okay? So I'm gonna just zoom out real quick. This is the year. This is how stocks been going up. So majority of the times, you wanna catch calls in an uptrend. You don't wanna go against the trend, okay? You wanna go against calls. But at the same time, on a day-by-day basis, when you zoom in and you come back out, you see, sorry about that, you see supply and demand. So that's when it come a little bit more, tricky. So on certain days, when we coming against supply, that's resistance. That's where you want to catch puts. Demand is when you come down to a demand zone and you bounce. This is when you want to catch calls going up. All right. So I always play it by the every dollar or every $1.50. So you see the next, you could always see where the next resistance is, and it's always going to turn into support. So you see 194.50 was resistance. Then it broke through. Okay, you could get calls right here on a breakout and ride that $1.50 wave up and catch some money. And you could wait till it get up here, wait till you see some rejection candles and buy puts at resistance to come down. then you could either buy calls here, which is the next support, because you know resistance turned into support now. You could buy calls at the 94.50 level, or if you want to be more safe, you want to, if it breaks through this 94.50, then you want to wait to about 92.50, or you see this is like a support level 93.50 right here for another support. I gotta draw that line. But yeah, this is all I do. All I do. All I do. And in the past few days, this was last week, I made money off the same play 3 days in a row. Literally. I waited till it got to resistance. I buy puts. It come down. Then you buy calls. Buy puts. Calls. Puts. And I'm just wrenching and repeating. Wrench and repeat. Wrench and repeat. Over and over. Now, I usually trade same day expiration calls. So I buy contracts. Like I say, SPY is at, let's say we open up at this 94.50 level, right? I wouldn't buy a 495 call or 496 call. I will buy that 494 call. Okay, that's in the money to be safe. And that's my strategy. And if the play go in the opposite direction, I'll lose money less quicker. And I will know when to get out. If it's a clear direction, it's not coming towards my way. All right. All right. So those is the things that you need on an everyday basis. You need your laptop or a desktop computer to see your charts. All right. You need to draw your support and resistance lines. Now, I'm going to put it in the chat. Hey, this is a support line. This is a resistance line. I'm looking for some rejection candles. I'm looking for some bullish candles off demand. I'm looking for some bearish candles off of resistance. All right? This is what we're going to do. That's my strategy. Y'all see how to buy a call and to buy a put. All right? Those is how you trade options on an everyday basis. You need your charts. You need some time in the morning. You want to be up 9 o'clock charting, studying patterns. Okay. Now, I'm going to make another video talking about the candlesticks and what each candlestick mean, how they work, what signs they give you. There's a lot of things that go into this, but those is the basics. Basic. You can start trading tomorrow on a paper trading account and just test it out. Hey, I see is a support at this. What is the support? Somewhere that recently bounced off of something. What is the resistance? Something that recently got rejected off of something. So when you trading, you always want to have a strategy. You always want to have an idea when you want to sell, when you want to buy. All right. So if SPY drops to 492.50 and I buy calls, the next sell range will be for me is 94.50. That's why I want to sell. We don't want to hold these contracts long and thinking they're going to just run all the time. Sometimes you want to take it day by day. Listen, 30% profit, 10% profit, 20%. Let the wins add up. Okay, let the wins add up. It's money in the charts. If we look at the charts and you study it enough, you'll realize, like, I see what you're talking about. I see how this works. I study the charts. All right, supply, resistance. This is what we do. We go do the same play every day sometimes. Same day. Some days the market would just hit that level, bounce right back down. Hit that level again, bounce right. The third time, usually it break through or that's it. It would just fall from there. All right, but overall, we in a market uptrend. So you want to get calls on every pullback. I would not fight against the trend. You want to buy calls more than you buy puts. That's just how I feel. All right, another episode from trenches to the riches, y'all. Let's get this money.